welcome to another Metastock webinar. We are excited to have you here this evening. Tonight we're going to be having Steve Bigalow talk to us. He's going to be talking about identifying breakout price move setups with candlestick patterns. Steve is one of the foremost experts on candlesticks, and we are so excited to have him here with us and talking about how to identify price breakout moves with those candlestick patterns. So we're going to get started in about 2 minutes here. I just want to come and say hello. We're going to get started in a minute. I'll check right back with you here. Okay, it looks like everything technically is set up to go. Hopefully you can hear me okay, which it looks like you can. So that means everything's going to go smoothly tonight. We're all set. Now in about 50 seconds here, I'm going to go ahead and bring on Jeff and Steve. I've just checked in with them. Everything is looking great on the GoToWebinar side. So we are all ready. They are all set. We're ready for another exciting Metastock webinar with Steve Bigalow here, identifying price breakout price move setups with candlestick patterns. If you're not familiar with Steve, you're going to have a great introduction to candlestick and candlestick patterns tonight. So I'm going to get us started here in about 25 seconds, and I'll be right back with you to say hello before we go. Okay, everything looks great. We're good to go. Let's go ahead and get the ball rolling. Have a great seminar, everybody.
All right, thank you, Kelly. Appreciate it. Hey, everybody. Thank you, everybody, for letting me know you can hear us. Jerry, Jim, Neil, Na, Diego, CJC, Misha, Gregory. Welcome, everybody. Hello, Ro. If you're joining us on YouTube today, make sure to like and subscribe. It helps a great deal. We appreciate it. Tell us where you're from. Jerry says he's from across the pond. I'm assuming that's UK because that's usually kind of how that's described. But if you're somewhere else, let me know. Anyway, today my job is to introduce our speaker and read this first, though. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Nilsu, I'm sure I'm going to say this wrong. Nilsu Wam, welcome from Thailand. Good morning. Happy 8 a.m. I'm glad you could come with us and join us today. Our guest today is Steve Bigalow. Steve is a good friend of mine. We've been doing stuff with Steve for, gosh, it's probably going on decades now, like probably 2 at least. Steve is a really good friend of mine. I've learned a lot from Steve about how to trade. A lot of the patterns that he's going to talk about are patterns I like to scan for every single day. And I just love to listen to him talk. Not only is he informative and funny, but he's a very, very good teacher as well, and he does such a great job. So with that being said, Steve, let's go ahead and bring you on, and I'll get out of the way, and you can do your thing. So Steve, welcome.
Well, thank you, Jeff. Thank you, Kelly. Let's see, I'm going
to make you the presenter right now.
Okay.
And then that should say, hey, you want to share your screen?
Show my screen.
Okay, I can see that.
All right.
I don't have your webcam on right now. So right below where you turn on your camera.
Share my webcam. Is that it?
Yeah.
All right.
I can see you. I can see your screen. I can hear you. That's my cue to get out of here. It's your turn.
All right. Welcome, everybody. Like to do some of these evening sessions because that allows people to get home, get settled. So my first question I usually ask is how many people have seen my presentations before? Obviously, Y for S, N for no. That'll give me a gauge of how detailed I describe each chart.
Yes, for me, Steve.
Okay. Whoops, okay, there's one. All right. We only got one answer. Can everybody hear me all right, I guess?
Yes, you're coming through.
Okay.
And just so in case you don't know, because sometimes with GoToWebinar in the web client, people will find the questions, but they're off to the right. So that'll help if you're looking for it. And now we're getting tons of answers. So there you go.
Okay, so most everybody. So, all right. So one of the major advantages that we have with candlestick signals is we know with a high degree of probability what will occur after a signal or pattern. And that's exactly what we can set up, and I'll let Jeff at the end show how you can scan for the different setups. So for those that don't know me, I've written 3 books on candlestick analysis, and I always kind of refer everybody to this one. That's the one that has all the meat in it, the signals and patterns. But what the basic of candlestick signals are is out of the 50 or 60 candlestick signals in the candlestick universe, you only need to learn 12. This is what we call the 12 major signals, because they're the ones that are going to occur 99.9% of the time. And if anything else shows up, you don't want to spend a lot of mental time and energy trying to learn those because they occur so rarely. So right now, the first thing that we get as far as a benefit of candlestick analysis is we can analyze what the overall market trend is doing. So we were having a tough time getting up through this resistance level of what we could perceive in the Dow as kind of a wedge formation. And then today it proved itself that it wasn't going to go up. It's pulled back. Now, it doesn't necessarily mean we're in a downtrend. It might mean we're still in a sideways mode, which still makes having both long and short positions in the portfolio a logical trading strategy. But here is another signal. Now, just to kind of dispel what I just said, learning the 12 major signals, in my books, I put all 50 or 60 signals and patterns, but I have them in there so that you don't have to necessarily learn them. You just go back through and browse them every now and then just to recognize a pattern. And this is a pattern. This is what we call 2 dark crows. Notice how it opened here, closed here. Then today it gapped up and opened at the same level it opened yesterday and traded off. That is a sell signal. That means the bears are in control. Additionally, it closed below the T line, which is another high probability factor. Now, anytime we see a candlestick sell signal, especially in the overbought area, and it closes back below the T line, the probabilities are pretty strong that we're in a downtrend. Now, just to kind of reiterate real quickly, the T-line is the 8 exponential moving average, and it has Fibonacci characteristics, which means it acts like a natural support and resistance level of human nature. So if we see a candlestick buy signal, there's a T-line rule. T-line rule is you can stay long as it stays above the T-line until you see a candlestick sell signal and a close back below the T-line. So as you can see, my charts aren't that complicated. You've got the T-line on here, the black line. You've also got the 50 and the 200-day simple moving average. They're on here because every major money manager around the world uses those moving averages to make their decisions. We don't use them to make our decisions. We use them to see what everybody else's decisions are at that level. And then I use stochastics, 12-3-3, because I'm a swing trader. My trades last anywhere from 2 to 10 trading days on average. But the Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in the oversold area, probably seeing a reversal. If you see a candlestick sell signal in the overbought area, you're probably seeing a reversal. If you see a candlestick buy signal in the overbought area, it probably doesn't mean very much. The T-line was short for trigger line, trade line. We were trying to come up with a name for it, so we just called it the T-line. I actually did that to make sure, because I was going to type it quite often. I didn't have to type a big word every time. But it was produced by one of my first private training students that came down from Anchorage, Alaska, loved candlesticks. And 6 weeks later, he called and said, hey, take a look at the 8 exponential moving average. Now, the reason this is so effective or so useful is there are candlestick sell signals up here in the overbought area. Now, what is the biggest bugaboo most investors have? Oh boy, I've got a profit. I better take a profit, because I sure would look stupid if I'd let this turn around and turn into a loss. So people take profits just because they have profits. Now, I even watched on the news, CNBC, they were talking to some, or maybe it was on Charles Payne on the radio, that somebody said, oh yeah, we bought Tesla at 110 and it's now doubled from where we bought it, so we're probably going to take profits, which has absolutely nothing to do with what the price might likely do. So there are so many flaws in a lot of people's investment strategies, but if you stick with the basic concept, and I'm dragging out here, but this is the most powerful statement in this whole process, or this whole presentation. If the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely strong trend analysis combination. And the most important factor, like for myself, starting off as the worst investor in the world before candlesticks came along, it keeps your emotions out of your trades and gives you a platform that is basically a high probability expected result. So the same scenario, not the same scenario, is this is what we're looking for. This is one of your strongest signals. This is a best friend signal. A doji followed by a gap up. A doji followed by a gap up in the oversold area and a close above the T-line. Now, good bullish trade. How long do we hold on to this? Well, you just hang on to it until you see that sell signal and a close back below the T-line. This is what keeps your emotions out of your trading. Boy, I got a great profit. I better take a profit because I've got a profit, instead of doing what the chart is telling you to do. So there's a truism that if you see a buy signal and a close above the T-line, you can stay long, because the probabilities that the uptrend is confirmed is extremely strong. Same scenario on the downside. If you see sell signals and a close below the T-line, you can stay short until you see a buy signal and a close back up above the T-line. Same truism. If you're in an uptrend and you're thinking, oh boy, when do I take profits? Well, if you see a sell signal and a close below the T line, the probabilities are extremely high that you want to be out of that or take profits out of that trade. So where are we looking for the best day trade setups? Well, this is our J-hook pattern. This is a more defined J-hook pattern that we call a bobble breakout. Notice how when it came up and hit the resistance level, it pulled back. But notice the next thing that it did. It couldn't close below the T-line. So when it started trading positive, especially gapping up and coming up through the 50, the result there is going to be that it's probably going to move higher. Why? Because what do you think everybody and their brother is watching? They're watching to see whether they're going to get through the 50. We can see that it's setting up because of that J-hook pattern. This becomes an excellent entry point, whether you're a day trader or a swing trader. You're probably going to have a high probability trade result. Same scenario right here, a bobble breakout, or this is what we call a J-hook plus. Notice the J-hook pattern that's supported right here on the 200. If it opens positive the next day, it's telling you exactly what we expect coming off of this pattern, that they aren't coming back down through the 200. It's supporting. That's where everybody says, up, they're not coming down through the 200. Let's got confidence to be buying. Same scenario on the downside. This is what we call 2 + 2 analysis. Look at our Doji, a day of indecision that failed right smack dab at the 50. And what do we know about the Doji Rule? The Doji Rule basically says the price will usually move in the direction of how they open after a Doji. When it opens lower after failing at the 50, you probably know that you're going to be in a downtrend. Will it be this magnitude? Have no idea. But the nice thing about knowing what should happen after a candlestick signal is you know that you're in the right direction and that you have a much greater probability of being in a big move like this with much greater expectations. So there's your best friend signal. First of all, if you're identifying it and you see they start trading positive, you can be buying a day trade, or after that day has set up, because we know what the expectation is after a best friend signal. There's usually going to be a very strong move to the upside, which tells us, boy, this becomes a good day trade. If this starts trading positive after this day, I know I have a high probability of being in the right direction at the right time. As a swing trader, I'm thinking, all right, if they've bounced up through the 50, where do you think the next target's going to be? Up here at the 200. Again, I always tell people this is not rocket science. This is just taking advantage of what the investor or the Japanese rice traders have produced for us year after year, decade after decade, century after century. Human nature works the same way. A lot of people say, do you have to know technical analysis or anything like that? And the answer is no. All you have to do is be able to see. And once you learn the candlestick signals and understand what usually happens after a signal, you're going to have the same advantage as somebody that's been trading in the markets for 50 years. It kind of is like the old couple that are getting ready for bed, and she's standing there naked in front of the mirror, and she said, look at me. My face is wrinkly, my arms are spindly, my butt's scrawny, my legs are skinny. She turned around to her husband and said, is there anything nice you could say about my body that would make me feel good? And he goes, well, your eyesight's still pretty good. So all you have to do is be able to see and analyze what the signals and patterns are doing. So signals and patterns have expected results with a high degree of probability. Google in the last couple of days, I don't know whether it was their earnings, but notice where they opened. They opened below the previous day's open. That's a strong indication you're probably going to be in a bearish kicker signal. So how do you take advantage of that? Well, there's the gap down on your 10-minute chart. May not be shorting yet, may not be shorting yet, would be shorting right here because that's telling you they're still taking it down. And then where is our first buying occurring? Well, there's kind of our little bullish harami on the 10-minute chart, probably taking profits right here. Now, here's one of the things, though. I'm going to kind of promo the fact that on the 18th, we're going to be doing a day trading session, which is also good for the swing trader, because there's lots of truisms that happen when you have a big price move like this. The first time you see buying, if you were short, you take profits, because this is usually what will happen after that. This signal right here has pretty much told you they've reached the level of equilibrium where the bulls and the bears come together. That means this trade is probably over for the day. It's not going anywhere. The husband in that story would have a doji. That's right. So if we know what the result is of a bearish kicker signal, that means we can be prepared to even do another day trade if they start trading it lower. Again, there's your bearish signal on your 10-minute chart. Same scenario. Where do you cover your short position? Right about in here, because then look what happened for the rest of the day. It went sideways from there. So everything that we look at on a candlestick chart is not conjecture. It's not somebody's prognosis. It's the actual buying and selling of investors, showing what the true investor sentiment is. And I always kind of want to stress that fact, is that you've got so many people out there that are analysts or I hate to bring up examples. The other day, I was listening to a couple of these analysts on CNBC after the market closed, and they were talking about Apple. And one of them said, yeah, we're going to buy Apple when it comes down to the $150 level. And if it goes lower, we're going to buy some more. And I'm thinking, that means you don't know what the price is going to do. You're just buying because you think at some point in the future it's going to go up. That kind of alleviates the whole basis of why you should be investing. You should be investing because you see that prices are moving in the direction you want them to. How come you don't show the chat room anymore? How come you don't show the chat room anymore? Michael, I don't know what that means. The chat room anymore. Yeah, we got the chat room open every day. Have about 160 people in there on average. And we do a Monday night session and we do Thursday night sessions. Do you drill down to 10 minutes when you're considering a trade as a swing day or swing trader? Yes. If I think here's an example. What is the overall trend of the hogs in this chart? We were short from this point. Then it started getting rocky, but you could see how it was rolling over. So how do we trade this? Well, trade off the 10-minute chart. And how long do we stay short on this position? Right to about there. After that, pretty much traded flat. All right, Darren. So if I'm swing trading or day trading, yeah, I use the 10-minute chart as my bellwether. I can also go to the 5-minute chart. And here's an example that if we thought it was going to be short, we're in the oversold area and we think it's heading up, but it's still heading down. Where do we take profits? If you see a fast move to the downside, we start covering our short position the first time we see buying. Because here's another thing that is evident on your charts. I should have told the caveat to the T line is the further away you move from the T line, the higher the probability it's going to come up and test it. That is a very, very strong statistical probability. So if I had been short here and it took a big tumble real quick, like in 15 minutes. And then you started seeing buying. We cover the short position because you're that far away from the T line. Your stochastics in the oversold area. Where do you think it's probably going to go to? They're going to bounce it right back up to the T line. So the Doji Rule makes for very easy day trade setups. Look how this one started out. Your best friend signal hovered right here at the 200. Kind of a doji day yesterday. Today, when they opened it positive, you could start buying, because what do we know about the doji, that setup? That the Doji Sandwich is going to have a day of that magnitude, probably in the same magnitude here. So at least we know we could be buying, knowing that we're heading in the right direction. Or on the bearish side, we'd recommended going short on HAE, and no, it didn't confirm yesterday because it opened positive and traded positive. But look what happened today. Opened and started trading lower. What was the expectation of this candle? Bearish Doji Sandwich, the same magnitude as this candle. And what would this candle tell us about the support level of the 50? It's not there anymore. There's probably more downside. So when you see something like this, now, when you see something like this is the advantage of having a chat room where everybody's looking for the same type of situations. So look at our little gap up breakout. So the rhetorical question is, should you be buying here, buying here, buying here, buying here? Where would you be buying something that's skyrocketing? Once again, that's an easy process using candlestick charts. Wouldn't be afraid to be buying here, wouldn't be afraid to be buying here, wouldn't be afraid to be buying here. But then look what happened. There was our first sell signal. And look at the other aspects of this chart. Look how far away you are from the 10-minute T line. That tells me if I was buying down here and I was going to take a quick trade profit, I'm closing out in here because that's the first signs of selling. Now, what do we expect? Well, you know that if you see a sell signal, it's probably coming back toward the T line. When would we be buying? When we see, this is again one of the truisms or statistical factors, that if I have sold here and I think it's still going up, I don't buy until you see a close back up above this level. Because until they get up above that level, the probabilities are pretty strong they're going to be moving sideways. However, look what happened once it got back to the oversold area. Another bullish signal, a double doji setup, and they start trading positive. We could be buying again here on a day trade basis, because what's our next target? We want to make sure if they come up and test this level, they go through. If they fail at this level, we're right back out, because that tells you they aren't going through that level. So everything that we look at on a candlestick chart is just pure common sense. That's using the indicators of buy signals and staying above the T line. Another pattern setup. If you're in an uptrend and the next day they gap it down below the previous day's open and do a doji, that is your first sign of, if you're long, close out the position. Because logic says if you're in an uptrend and they're gapping it down below the previous day's open, the bears have taken control. If you're ready to do a day trade on this, again, what is our Doji rule? If it opens lower and starts trading lower, even if it comes up and then trades back down through this level, that becomes a very strong entry point to start shorting, because that's exactly what we would expect after this. Again, your bearish flutter kicker signal. A bearish flutter kicker signal is merely a kicker signal that has this little flutter in between. And this gives you a much stronger perspective that The Doji Rule says they're going to move in the direction how they open after a Doji. What are the stochastics? They're 12-3-3 slow stochastics. Now, some people want to use RSI. Use whatever indicator you want to use, because the logic is the Japanese rights area say if you see a buy signal in the oversold area, the prospects, the probabilities are pretty strong, you're heading up. If you see a sell signal in the overbought area, prospects are pretty strong, you're heading down. If you see a buy signal in the overbought area, it doesn't mean anything. On Google example for a short, you said sell as soon as you see a green candle, but there are a couple green candles. Oops, let me see if I can go back. Well, how far back did I do that? Down here. Yeah, that wasn't really confirmed. That could have been confirmed if I covered my short position right here. I got most of the trade. If I covered my short position right here, that was telling me they were bottoming out. It was going sideways. Was that the right? Yeah, so if I was getting ready to go short, maybe not, maybe not. Yeah, there's a place to go short. Now I'm down here and I do see a bullish Harami Doji Sandwich in the oversold area. That's a good place to go cover your short position. Now, if I was going to reshort it, same scenario. I wouldn't do anything until it came back down through this level. Otherwise, that tells us we're in the equilibrium. Rob, let's see. Let me see if the end of that question. That all depends on what the market is doing. If the market is in an uptrend, and then the first 45 minutes, hour and a half, it backs off, but then it starts coming back up again because we expect it to be in an uptrend. Yeah, I'll go to my 10-minute chart and see whatever I'm looking at that I might be buying is starting to come back up. And when would I start? Or if the chart I was looking at to buy had backed off with the market, and the market started coming back up, yeah, I'd go to my 10-minute chart and see if that stock that was backing off on the 10-minute chart is now coming back up through the 10-minute T line. If I want to be aggressive, that's where I start buying. Do you ever use the 100? Robert, you can use whatever you want to. The nice thing about candlestick charts is anything that you put on your chart should be something that adds to the probabilities that you're in the right trade. As you can see, mine are relatively simple because the T line is the most effective trend indicator. But if somebody, I've also got the 34 on here because it works reasonably well. If you put the 100 on, see how well it works or see if it's something that is effective. If it doesn't add anything, take it back off, because the most important factor on a candlestick chart is the signal itself. Everything else should be a confirming indicator. TradingView has no 10-minute chart, but has a 5 and 15, which is better. Walter, whatever your trading style is. I used to trade the E-minis off the 1-minute, 3-minute, 10-minute combination. Right now, because I don't have as much time to sit and trade because I've got the chat room going on and all sorts of research going on. I use a 10-minute chart as my bellwether. I don't trade as often, and so the 10 minutes, so I might use a 5-minute, 10-minute, 15-minute combination. And Walter, as Bruce is saying, you could probably add the 10-minute chart to your on TradingView. All right, so this is a very simple setup, the Doji Sandwich. This is a very easy trade setup. A lot of people say, well, I don't want to be chasing it. Well, you wouldn't be chasing it if it moved up here. And again, you had when to get in, when to get out, and when to get back in. Can you change the time in interview to 10 minutes? Oh, you can change. All right. Yes. So, Walter, I would check because I'm pretty sure you'd be able to change that on your charts there. Remember, except the T line, the other moving averages are just, yeah, exactly. The other moving averages are just seeing what everybody else is doing. The T line, the reason the T line is so effective, or should be illustrating that they're so effective, is notice how it traded right along the T line. That is more relevant because nobody has the T line on their charts. So it's not like everybody's waiting to see what happens back at the T line. Because if they're not using it, it kind of proves more so that it acts like a natural support and resistance level of human nature. So knowing those different signals, like a bearish flutter kickle, that's not only a high probability day trade entry, it's a high probability swing trade entry. So we can see what happened on Roku today. They traded below the T line, they traded up. Where would be an excellent place to enter a short trade? When it came back through this level, because what was that telling you? The sellers are still in control. And when you can see that the market was selling off, just gives that that's more impetus up there. This one is still selling off because you closed below the T line. Here's another aspect of human nature. Where do most people buy? They buy exuberantly at the top. So the first thing the Japanese rice traders illustrate to us is, if you see exuberance up here, get ready to take profits. The next day when they gapped it down, that was a good time to take profits. What were all the elements for getting ready to take profits? 1, they gapped up in the overbought condition. 2, look how far away you are from the T line. You start looking for your first sell signal. Go to time frame. Okay. All right, so today, Baxter Labs gapped down. So there's your wave 1, wave 2, going into wave 3. If the market opens lower and this trades lower, you've got a high probability that you're going to be heading lower. I didn't do the other chart. Darn. Take a look at Electronic Arts, EA. Kind of the same scenario. Take a look at, maybe I did have them on here. But here's why you want to know your signals. There's your kicker signal in Moderna. Look at your uptrend. Bad hair day. That would be pretty scary. But where did it finally close? Close back up above the T line. Now, not only did that tell us they weren't selling, but they did kind of a J-hook pattern right here. How did you manage to trade without the T line? Michael, again, I always reiterate the fact that I was the worst investor in the world. I was a stockbroker for 8 years when I first got to Houston, Texas, with Kidder, Peabody, Cowan, and Oppenheimer. And I got out of the business because I realized that most brokerage firms had no more idea about what made stocks go up or down. They hired young guys out of Harvard with economic backgrounds, and they would be the analysts, and they would find companies that had good management, good markets, good sales projections, blah, 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 blah. and it didn't mean a hill of beans. If the market was going down, those stocks were going down. And I could go on all day giving examples. So I got out of the business, and when somebody put candlesticks on my desk, it took months for me to pick it up. But the first thing that hit me was, this all makes sense. And all of this basically says is you're doing what the markets are telling you is going on, not what somebody's prognosing. Yes, I think international fragrances also had a big gap down. So when you have a day like this, and let's say somebody in the chat room says, take a look at ALLK, it's moving big, and you look and you see, oh man, should I be buying here? Should I be buying here? That's where you can go to your 10-minute chart, and you use the same parameters that you would use on anything else. Buying. Oops, now look where we are. Look how far away we've moved from the T-line in the overbought area. Where would be a good safety stop? Well, if this opened here and traded up here, you immediately put your stop right here because you already had a sell signal if it came back down through there. Or if worst case scenario, you didn't do it in time, you definitely don't want to see it trade back below this level. If it does, where do you think it's going to? At least back to the T-line. If you want to be a little bit quicker, same scenario. Traded up, where would I have put my stop? Right here. If it came down through there in the overbought area, that far away from the T-line in the overbought area, that's extremely high probabilities that that day trade is over. Close out the position. The signals are the candlesticks, not the averages. But the T-line is a helpful, it is, a lot of people ask, what about Heikin-Ashi? Heikin-Ashi is kind of a vanillized candlestick analysis. What about Bollinger Bands? What about Fibonacci numbers, trend lines, support and resistance? They are all good for seeing what everybody else's decisions are. The signals themselves are telling you exactly what's happening in investor sentiment. Then you can see what everybody else's decisions are at those levels. Do you think it best to get out of the market every day to avoid overnight? Lewis, that all depends on what your trading strategy is. Again, if this was a daily chart and I didn't see anything that was telling me there's any selling, yeah, I'd continue to hold it. I could probably have gone to a daily chart. So here's another example. Sound is kind of one of the artificial intelligence stock. It gapped up, it didn't confirm, but as soon as it opened positive the next day, what was our expectation? Well, look at your big fry pan bottom, and it broke out. What was the expectation? It's probably heading higher. So that's where you could have gotten in right here on that positive analysis. That's where you could probably be taking profits. Then you might have gotten back in because look at your fry pan bottom. Starting back up again, you could get back in. Whoops, did I click too fast? So anyways, using the simple scans that Jeff's going to kind of point out is that you can find, depending on what your trading style is, the best trade setups for a day trade and or swing trade. So again, everything built into a candlestick chart is the logic that prices are going to do what they're expected to do after a candlestick signal or pattern. All right, so, oops, I went over time. Are there any other questions on candlesticks before Jeff goes in and shows how to start scanning for some of these?
We have some comments from YouTube. We're having a really good conversation here on YouTube, and I wanted to bring you involved or just kind of tell you some of the comments that we have here. So let's see, nothing really big. Chantamo says, I just bought the poster of the major signals from your website. I
would suggest put it in a nice big wooden frame with glass and hang it in your living room.
I actually told him I had the mouse pad version, but I spilled coffee on it. So maybe for Christmas Eve, you know.
Yep, I'll send you another mouse pad.
I do still have, and then somebody brought up, Cassie said, I love my flashcards. And I'm like, I still do have the flashcards and have a copy of them right here. So we've been talking about your merchandise in the YouTube chat room.
Okay.
But
Rob, that is what kind of turned me into being the worst investor in the world to where I was starting to make money. Was sticking. It took me a while to realize that if I just did what the charts told me to do, I had much stronger probabilities that I was going to be in the right direction, which then cut away all my emotional decision making. Now, remember, the term that I'm using is probabilities. Not every trade's going to work. But the nice thing about a candlestick chart is it tells you when it should be working, and then it also tells you when it's not working. So you've always been told to cut your losses short and let your profits run. I've been investing almost 45 years, over 45 years, and I've never heard a money manager tell you how you cut your losses short and let your profits run. Candlestick analysis has very simple conclusions. If it's working, you can see that it's continuing to work. If it's not working, you get right back out very quickly and go on to a chart that has better probabilities. So being the worst investor in the world, not only did the candlestick charts tell me what to be doing, but it also kind of produced an inherent discipline to do what the charts are doing. Neil, yes, I think you could get the slides. I can send them to Jeff. Niels, you don't have to. If you want to, I mean, it's not very difficult analysis to put the 8 exponential moving on average on your chart, or put the 9 exponential moving on your chart, and keep them there for a while and see which one works better. I mean, they're probably going to be close enough that it doesn't really matter. Now, Rama, there you go. How do I get flashcards? Ooh. Keith, that's a toughie. I don't know how much it would cost to ship a little box of flashcards to Thailand. All right, and let's see, I was going to say something else, but I forgot what it was. Oh, I kind of chastise the people in our chat room that keep asking, well, what is this signal or what is that signal? I don't profess myself to be a great author, but if you get the High Profit Candlestick Patterns book, it's easy to read. I don't put in fluffy stories or it's all kind of when I wanted to invest or learn to invest, I said, just tell me what to do that works, not all the little side stories. So it's pretty straightforward. And again, the whole basis of candlestick analysis is if you know the signals and patterns and understand what the psychology was that created those signals and patterns, you now have the same grasp of what moves prices as somebody that's been trading in the market for 50 years. All right, anything else, Jeff?
No, that's it for the question.
I was just seeing if there's...
Somebody told me that I should just wash my mouse pad. They did with theirs, and it looks great. So I'll give that a go.
All right.
Robert wants to know, what's your rule of thumb when a trade runs away from you, when you bought the signal but then missed a signal when the market took a dive? Do you have a hard rule like cut your losses at -4 or something like that?
No. You pick out a point that would tell you this is not working. Let's see if I can. Let's say I bought right here because this pattern was telling me, yep, we should be moving in this direction. But if it came back down and traded below this level or closed below this level, what's it tell me about my direction? It didn't work. Close it out right away. Is that a book in a book? I don't know what that is. Is that book in ebook? I don't think we have it in ebook. I don't know. Robert, do what the chart tells you. If the rule of thumb is, if you see a buy signal and a close above the T line, close it out. If you see a sell signal and a close back below the T line. Every time we do a trade, it's based on the fact that investor sentiment is doing a signal or pattern that tells us what way the direction it should be going. If that signal or pattern doesn't work, close it right back out. So the one thing that I had to learn was when I was first in the brokerage business and I was thinking about doing commodities, they said, well, if you could hit commodities correctly 50% of the time, you'd make a fortune. And I kept seeing that if you could, it's kind of babbling here now, if I'm hitting about 70% of my trades, I should be getting rich. But the one thing you have to realize is if 70% of your trades are going to work, that means 30% of them aren't. And you have to know exactly what to do to come back out of those 30 that aren't working. So that's that process of cut your losses short, take small losses, and let your profits run. Can you show the high profitability? Oh boy, it's way back up. It's called high profit candlestick patterns. Now on Amazon, I think they charge $98 for it. If you go to our website, I think it's only like $55. But I get a lot of good response from it, or favorable response from it. So with that, Jeff, I'll let
website would be Candlestick, and the website that you should go to for that is candlestickforum.com, right, Steve?
Correct. Yep.
Okay. And I'll type that up here for everybody. Kelly, will you get that into the YouTube link too for us? Okay. All right. Cool. Yeah, I think we've run out of the questions, and we've talked about how much we all love your mouse pads and posters and flashcards and books. So let's talk.
Right. Well, you show them how to find the trade setup. So that's the purpose of all this.
Sounds good. Let me go ahead and do that. Thank you. Before I let you go, Steve, thank you for joining us tonight. I appreciate it. It's really, really good to see you. So Tina says her screen's freezing up. So hopefully that'll fix
that's
itself.
Just because that's just because we kind of stopped here on this.
On that side. Oh, okay. Yeah. I'll make myself the presenter because I'm going to take over in just a second here anyway.
Thank you, everybody.
You bet. Thank you, Steve. Appreciate it.
All right, thanks.
So let me go ahead and show my screen. Steve, great to see you, as always. All right, very cool. Let me go ahead and show this real quick. Let me know if you can hear me and see my screen. Tina, if you do have issues, I'm going to go ahead and take this off because I don't need it now. If you do have issues with GoToWebinar and the screen freezing, we're almost done. But sometimes it helps if you just hit F5 or refresh your browser if that does run into issues for you. So with that being said, I do want to talk about the work we've done with Steve, and I'm really proud of it. So let me kind of go back into the PowerPoint and kind of set up exactly what we're going to talk about. This is what I'm going to show you, and the scanning and the metrics and that kind of stuff is Candlestick Profit System 2. And it's something that we worked really, really hard with Steve on. I remember we worked on it and for, it must have been 18, 20 months. It took forever to kind of get the patterns perfect. And it is one of the most successful market add-ons that we've had. And while I'm kind of talking about it, and while I'm kind of thinking about it, we have Stocks and Commodities magazine. Technical Analysis of Stocks and Commodities magazine is a magazine that's existed since 1982, and we send products to them for review very, very frequently because because they review them, they talk to us about them. So when we initially did, this is the second version, as you can see, because it says 2.0 on it. But when we initially sent it, did the first version of this, we sent it to the late Dennis Peterson and had him look at it, and he absolutely loved it. When we did the second version, we sent it over to Barbara Starr, and she absolutely loves not only Steve, but she loved kind of the implementation of the product. So I'm super proud of it. We put a lot of work into it in terms of what it does for you, as well as kind of it's been very well received by I guess you could call the experts or whatever. It's also been very, very well received by the industry. This is one of our most popular add-ons. And every year, Stocks and Commodities magazine does a Reader's Choice Award. And this is one top add-on for not just Metastock, but any product, a number of years. So let me kind of just go ahead and it's won a number of awards. I don't remember exactly what those are, but it's been kind of up there for a number of years. Before I show you the chart, and this is a list of the multiple day patterns. So you've got the Doji Best Friend, the fry pans, the belt holds, the dumpling tops. I mean, all of these patterns, and I'm not going to read them all, but all these patterns are identified on a chart for you when you apply the chart. And they're also scannable. So I'll show you how you can scan for them as well. So these are all of the multiple day patterns. These are all the single bar setups. Okay. Now, if I open up a chart, and I've already done that, I'm going to go ahead and show you the rest in software. But if I open up a chart, this is a chart of Tesla. You might have heard of it with what we call the CPS template installed, which basically means it's going to put the stochastics on there. It's going to put the T-line on there, the other moving averages that Steve talks about it, but it's also going to identify patterns for you. So right here, you can see there is a single day pattern called a hanging man right here. Before that, there was a dark cloud. Before that, there was a T-line crunch, a doji, a bearish engulfing, a left-right bullish, and a doji right here. Those are automatically identified and labeled on the chart for you. So if you're trying to learn what the patterns are, you don't have to really kind of focus on, okay, well, this is a T-line crunch because we're coming up. This is what that means. It's going to point it out for you, which makes it way easier for me, and I'm familiar with Steve's patterns for decades now, but just to have that identified on the chart and available is really cool. Right here, we had a bear kicker, bearish engulfing, hammer. You get the idea. All of those patterns that were kind of in that table are going to be identified and displayed for you. It's just done. All the indicators that Steve uses is going to be identified. And as you're learning, we talked about the flashcards, which I did go and I grabbed my copy of the flashcards. They're right here, just to show that I had them. But this is actually going to point them out. And if I have questions about what they are, right here, this right here is what we call our commentary window. So this is something that you can turn on or turn off. You can dock it, you can put it on the side, whatever you want, but it's basically going to help you understand what these patterns mean. So when I put the commentary window on the chart, what you're going to see is there's a red triangle right here. And that means that's the day that it's looking at. So there wasn't a pattern that happened today, but if I wanted to see like what the T-line crunch was, like this pattern that happened right here, let me go ahead and move back a little bit and I can show you exactly what it says. So right here it says the T-line crunch is a trend line created by the 8 exponential moving average. Traders can take advantage of long positions after the profit taking brings back to touch the uptrending T-line. Exit on any close below the T-line. So it's telling you what the pattern is, what we're looking for. It's also giving you a bit of an exit strategy. If this goes down below the T-line, you'd obviously want to go ahead and exit. Okay. This is kind of written for all of the patterns. So if I come back here to the left-right bullish combo, I can click on any pattern. It's going to tell me what they are. Some of the patterns, I actually did want to point this out. So I'm not going to read this out loud, but all of these do have really good explanations for you. Helps you learn the patterns, help you understand them. One of the things that we do really well here at Metastock, and one of the reasons I think we've been rated the best software in our price category for like 30 years in a row, is our ability to scan. And so I'm going to show you scanning in just a second. It's not going to take very long. I've already ran the scan. But a lot of times, if you're looking for a specific pattern, you're going to have a list of 5 or 10 of them. Like I like to scan for the Doji best friend. I'll have a list of 5 or 10 of them. And these enhancements are how you can determine which of the better patterns. So for example, if I ran a scan for left-right bullish combo, obviously this happened at a really good time for this Tesla chart. But if I was trying to evaluate, okay, what should I be looking for as a new trader? Right here, it's going to say the bigger the bullish engulfing signal, the more powerful the signal will be. So we had a very little doji here and a pretty big bullish engulfing, so I'd give it a little bit of a point for that. Also says if the signal occurs at a major technical level, like a moving average, a trend line, a Fibonacci level, or a support level, something like that, the more powerful the uptrend will be. So those are the things that I could look for if I was looking to use this as a signal. So all those are identified for you. They're all put on the chart. One of the things that I think Metastock does best is scanning. And all of those patterns are scannable. Like as a Metastock user, if you use Metastock, you can say, well, okay, I'm an optional trader. What patterns exist? Or I trade ETFs. What patterns exist? Or, even if we had quite a couple of you at least are from Thailand. Hey, I want to look at the stocks on the Thailand Stock Exchange. You can scan them. So we do get the data that we use from Refinitiv. And there are actually about 321, well, there's precisely 321,122 symbols that are in this database that get scanned. So if you're in Australia, if you're across the pond, there's a couple of you from London that are joining us. Wherever you're at in the world, if you want to apply this to the markets you actually trade, you can. Now, just for the purposes of demo, what I'm going to do, or to show you, I'm going to go into the scanner. So it's Explorer right here. And what I'm going to do is I've got them all selected. These are the patterns that are, there's actually about 7 scans that are in here. You got Doji Dynamites, J hooks, major patterns, power signals, price patterns. These other 2, the ones that I haven't selected, actually look for stocks that they weed out stocks that are under $5 or don't have enough volume. So you can run those every once in a while just to kind of build a universe of stocks. And that's why we call them universe scans. But on a day-by-day basis, if I'm looking for like a Doji best friend or maybe a J hook pattern, if I highlight any of these, it's going to tell me exactly what they're looking for. So I'm going to unselect like all of them actually. And what I'm going to do is I'm just going to look for one of my favorite patterns. So actually, let me go ahead and do this. Let me go ahead and unselect those. Let me go back in here. Okay, CPS. And I'll just do the Doji Dynamite scan. So this one, let me go ahead and hover over it. It's going to look for the Doji at the top, the Doji best friend, the left-right bullish combo, the left-right bearish combo, the series of Doji followed by a bullish move, kind of the McMuffin. Let me go ahead and select that. And what I'll do is just to kind of keep it fast, the scan universe, and you see it's remembered it for me, NASDAQ 100, Dow 30, S&P 500. So just to keep things real quick, I'm going to scan through those 530 stocks. So we'll go ahead and start that. We're looking at the current day. What I want to do is I just want to see if there's any Doji best friends that I can trade tomorrow. And so what this is going to do for me in the matter of a few seconds is it's going to go through all 526 of those stocks. It's going to reject around 98% of them. You see that's rejected right here. So that's 98 out of 100 stocks that I don't have to look at. I want to focus on the ones that have an opportunity. So, and this is going to give me that list. So we'll go ahead and let it finish. It's not going to, as you can see, it's not taking very long. And pretty soon we can kind of just focus in on kind of what the reports or the results look like. And it's that easy. It's done already. This is literally a scan I run all the time. So right here, you've got 509 stocks. We don't care about them. Those don't have an opportunity today. You have 17 that have an opportunity. Now here, it's a Doji at the top. I want to go ahead and let's take a look to see if there's any Doji best friends. There's only one. So out of those 526 stocks, if I'm looking for a Doji best friend, I can open up Waste Management, and if I like it, I can take a trade. If not, I can wait, or I can look for the other pattern. But there we've gone from 526 stocks to one. Okay, and I'm of course not going to just trade it. I'm going to take a look at it. I'm going to see if I like it, see if it's happening at a major technical level, all that stuff that's in the commentary and recommended to you. But how easy is that? I think one of the best things that we do, in addition to the commentary and the signal identification, is just the ability to focus. Because for me, I don't know kind of like what your schedule looks like, but for me, if I want to throw this at 3,500 option stocks and throw out 98% and just look at the stocks that have an opportunity, this is a great way to do it. And that's what we want to use this for, is to kind of help us save time. Because there's no way you're going to look at all the ETFs to find the Doji best friends. You're going to miss opportunities. This helps you find them. It points them out on the chart. I just love this thing. It's so helpful. So we did have a question a little bit about kind of like, well, everything that's included. Again, here's what we identify automatically on the chart. This is what you can scan for. These are all of these patterns. I think I added them up one time, and I think it's at like 32 patterns between the multiple day patterns and the single day patterns. So there you go. We talked about how it kind of identifies those on the chart. All in all, the CPS, our most popular add-on, I've always felt it's a little bit underpriced, but it includes 6 explorations. The expert advisor just identifies all the charts and has that commentary showing you. That's the layouts that include all of its indicators and those 36 different patterns. We only sell that for $500. It's a one-time cost. You don't have to pay for it over and over and over again. $499 is what we normally retail it for, and I think we should charge twice that. We're even going to go lower than that though. Here at the webinar, it's $399. The other thing that we do with this is it's a 30-day money-back guarantee. So you can evaluate it, you can play with it, learn all the patterns. If it's something that's helpful for you, you're willing to spend $400. But it's a very, very low risk reward, a high reward opportunity. I wish all of my trades had a 30-day money-back guarantee, for sure. But $399 is the price that you'll pay for it. That's one time. It does require that you own Metastock, either the DC version or the real-time version. DC means end of day. RT means real-time. Our pricing on Metastock starts at $69 per month. So that's also very affordable for a software that's been rated #1. This year, it'll be rated #1 30 years straight. But as part of that, if you don't have Metastock, we'll include actually a trial to Metastock. So not only are you going to get a 30-day money-back guarantee on Steve's program, you also get to be able to try Metastock, our award-winning software program, for free. Okay. There's also another thing, and then I do notice, and there's some questions coming in. I'm going to come back in and make sure I answer everybody. There's one other thing that I want to talk to you back earlier or late last year. I think it was like early part of December. So this is brand new training. We sat down with Steve and we did a candlestick training boot camp. It was around 6 hours of training. With that, he talks about market trend analysis, identifying the most robust candlestick trade setups, finding good trade entries, confirming indicators to use, when to get out of a trade, which is something a lot of people miss. It was really, really good trading that we're going to include. We're going to include that session that he did, and as well as an earlier session, a combined total of about 10 hours of recordings that Steve did, as well as a 1-hour bonus video. I call it a bonus video because, I'll do these all day long, but it's just how to use everything, how to do the scans, how to use the watch lists, how to manipulate your new Metastock charts. So normally, if you already have CPS, because it's been very popular and you just want to get access to that training, you can pay $449. That training will be instantly available as soon as you order it. Okay, 11 hours of training, 10 of it from Steve. Okay, if you want to do both the training and the add-on, we'll throw in all of those 11 hours of training, the Candlestick Profit Systems 2, the month of Metastock for free, either real-time or end of day, whatever you want. We'll give you Zenith market data. Zenith does a really good job of fundamentals. We won't get into Zenith too much, but they spent $1 billion on it, and it's the same data you'd get if you're a hedge fund subscribing to data. So you get Unleash the Power Metastock. You'll get a one-on-one with one of our support technicians who's going to sit down with you and make sure they answer any questions that you've got. You're going to get unlimited access to our support team. Oh, one of the things that was really cool is like in January, everybody that answered our support survey gave them a top rating. We had 100% support rating again for the month of January. I believe it was the month of January. Kelly, if it was just a week or two, let me know. But I believe that was what I read. And that's not uncommon. We get good feedback. So if you look at a lot of the videos that are up on YouTube, they'll be like, man, your support team, the word somebody used the other day was a gem. I send it to our guys. I'm like, you do such a great job. Here's just another comment about somebody that's good. So all of our support team is here in Utah. They're here to answer your questions. They can help you by chat, phone. You get unlimited access. But in addition to that, if you're new to Metastock and you sign up for Metastock for the first time, we'll actually sit down with you and make sure you understand how to use the tools. It's something that we've been doing for a number of years. It's been very, very popular because we understand that, you know, with our tools, we've been working on them for such a long time. We understand that if you know how to use tools, they're going to be more effective for you. And it's been a great thing. So normally the retail price for all of this stuff would be normally $1,400. Here at the event, it's going to be $698 if you do it at the webinar today. You can go online and do that at metastock.com/candlestick4md. We do have people that are available to help you. They actually have all logged in. You can call if you have more questions. Give us a call, 800-882-3040. They'd love to hear from you. If you're in Thailand or London and this 800 number won't work, but our chat line will. So metastock.com/sales-chat is the link for that. So give it a go. There's a reason it's been so highly rated. It's one of our most popular add-ons. Absolutely love it. I absolutely love Steve. I appreciate the stuff that he's done for us. 800-882-3040, metastock.com/sales-chat. Let's look at some of these questions real quick. Dan says, my charts seem to have candles too close together to read unless I zoom into view. Is there a way to have It's a really good question, Dan. I can help you with that. So actually, let me go ahead and go back into the charts. Number one, thank you for using Metastock. Number two, when you're opening up your chart, it's probably the easiest way to control that setting. So if you come to chart here, okay, and you're looking at Steve's chart, okay, what I've got right here, go ahead and you put in your symbol, or it's normal here if you want to. Right here where it says display range, look, I have 1250. That's too many to view. I'm going to actually change that to about, let's do 90, okay? And I'll go ahead and open up the chart. Once you set this, you don't have to set it again. It'll remember it until you go change it again. But now I should be looking at, when I open the chart, I should be looking at about 90 days of data instead of a whole bunch, okay? Now, if you open up a whole bunch, it's really easy to kind of change yours just by playing with the splitter bars. But if you just set it to about 90 or whatever number you want to look at, that's all you have to do. Set that one time and you'll forget all about it until you want to change it again, Dan. Hopefully that helps. Harvey says, your platform has a lot of price levels. How much for a swing trader that wants to trade real-time quotes during the day? Harvey, that's a really good question. Thank you. We actually only have really two price levels. There's an end of day, which is $69. And there's a real time, it's about $265 per month plus exchanges. So those are the two price levels that we have. Again, we are going to give you either one of those for free with all of the data and stuff like that. But there are some exchange fees that you may pay to get real time, and that can get really a little bit complicated depending on what you're following. But give us a call and we'll help walk you through it. So you're welcome, Dan. I'm glad I could actually answer the question. Let's see. What is the .com? Okay, so if you want to order the book, I'm going to go ahead and type this out. It's candlestickforum.com. I don't have any more of a direct link like that, but you could go to the store and it'll be on there. So there you go. Larry says, thank you. You're welcome. Let's see. Not Fair says, can you filter those Doji scans by sector and share price? So it depends on kind of where you're at. I think you said you were in Thailand. There are sector lists that are available for like US and Australia in there. So you can actually, like, for example, that's a really good question. Now, if I come in here and I just want to scan like the energy sector, for example, I can just go, okay, well, let's find the energy sector, and there's a group of 107. I can just run that scan. So you can filter them based on energy sector. We do have some scans that are pre-built that allow you to say they're part of the universe scans, and they just scan for stocks that are above $5. I actually have a pretty good guide that I put together. If you want to email it to me, or if anybody wants to see the guide on how to actually kind of create a price and volume scan in Metastock, I have a up on our blog a article that I put together several years ago that walks you through. It's easy to do, but it walks you through how to do it. So if you want that little blog, just email me. My email is right here, jeffrey.gibby@metastock.com. I'll look it up for you on our blog and send it over to you. It's really, really easy to do, but it's a question we get all the time. So when we get a question very frequently, I'll go make a little bit of a blog post so that I'll have it when somebody asks. Let me check YouTube real quick. I want to make sure I get all of the questions. Okay. I think I got them all. All right. OU 812. Ooh, 812. How am I going to pronounce your name? Ooh. Says, does Doji Dynamite scan for all the patterns that incorporate dojis? And he says, yes, yes. And one of the things that I like about the scanning, just to show you real quick, if I just hover over it, I don't have to look at that table. It'll just tell me right here. This will scan for Doji at the top, Doji best friend. So thank you for that question. Ooh. Okay, I think we got to the end of the questions. If I missed one, I apologize. I don't see any more in YouTube or in GoToWebinar. Again, I want to say thank you to Steve for coming. Steve's been such a great partner of us for such a number of years. We appreciate it. I've had the privilege of traveling with Steve, and I've learned a lot from him over the years with all the webinars we've done. And I just think he's a great technician. And so I would encourage you to take advantage of like his add-on. It's been rated highly in stocks and commodities. It's been highly rated by our users. It's one of our most popular ones, CPS 2.0. While you're at it, if you haven't tried out Metastock, you can find out for free why it's been rated the best software in its price category for 30 years straight. You also get that boot camp, some really, really good instruction. Steve spent so much time getting ready and talking and answering every question that came in. Really, really good boot camp. Over 11 hours of actual training included with that package. So normally $13.98, $6.98, even just for the training. What is that per hour? I'm not going to do the math. It's getting a little bit late. Give us a call, 800-882-3040, metastock.com/sales-chat. metastock.com/candlestick-forum-D. Thank you again, Steve, for coming in, spending some time with us. Thank you, everybody, for coming. I appreciate you. I hope you enjoyed it. I hope you learned something. If you're watching this on YouTube, either now or in the future, and you liked the video today, make sure to like and subscribe. That way YouTube will suggest to you when we have other video sessions like this. Otherwise, thanks for coming. It's good to see you. Stay healthy, stay good, stay well. We'll see you next time. Oh, right on. Just a question. A couple more questions. When will the recording of this session be available? In 1 hour, as soon as I hit the end button, you'll get a link to the YouTube recording automatically. It's already set up. So I'm in Thailand to provide CPS 2.0 as a separate software. Okay, so in Thailand, you can absolutely use it with Metastock. We have all the Thailand data for you. So there. Okay. Leon asked a question. If I don't like the software, you're going to like it. But if I don't, and I want to get a refund, can I get a refund for the $69 monthly fee? We actually include the $69 monthly fee as part of the free trial. So there you go. You don't have to pay for it for your trial month. You're welcome. Thanks, Neil. Let's see. All right. That looks like, again, all of the questions again. So we'll talk to you later. See you at the next one.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.